a number of times, providing the tools to protect the state's interest. From the Department of Revenue's perspective, this is absolutely critical to move forward with either the PPT or with the ACES plan. These provide us with the ability to ensure that the state's interests are protected in implementing the net-based tax. The first part is people. We have to have the auditors with the experience to be able to understand what they're looking at, know what to ask for, and to quickly surmise whether or not we need to look more closely at the reports that are coming in and to efficiently move through the auditing process. We're not going to be able to pay what industry pays for these folks. We're not going to be able to have the number of auditors that the industry has. But we are going to need to have the most experienced, creative, and dedicated auditors that the state can afford. And we believe that if we can move that level up to provide the state with the auditors who are capable of doing the work necessary to establish an auditing system and then implement that auditing system, that we can maximize compliance and protect the state's interest when it comes to a net-based tax. The way we do that in the state language is you create an exempt class of employees, and this would mean exempt from the current state pay scale. We've brought auditors up within the last year. We've gone out and recruited for auditors at the top of the state pay scale for auditors, and frankly we can't bring in the folks that have the experience level that we need to attract in order to really do the job. And so we need to make them exempt from the pay scale, move them up to the level where we can pay and keep and bring in that experience. Next, we need information. We need to have the information in the form that is going to provide the state with understanding about what costs are being deducted and bring it to us in a form that we can quickly and efficiently evaluate to both report out to the public in terms of what's being expended and what types of costs are being reported, but also to ensure that when we get to the auditing, that can be done as quickly and efficiently as possible. And so we need to get the details in a timely manner in a useful format. And we also need to get forward-looking information. The Department of Revenue is responsible for providing a forecast of what the state's revenue are expected to be in the next year or 2 years. The legislature relies on that information to establish what the state budget is going to be. With the movement from the previous tax into a net-based tax, the state now is subject to 3 variables. Previously, we had to calculate simply the price and the production. Now, I say simply, almost jokingly, because trying to forecast the oil prices, you've got Michael Williams in the back, who's the chief economist of the section. He can tell you how difficult it is trying to forecast oil prices. You can imagine on a world scale the changes in the amount of money that rides on changes in the oil prices, and nobody knows from 1 year to the next where the price of oil is going to go. Yet the state has such a tremendous interest in that. Our economic revenue forecasts are dependent upon as accurate a number as we can on both that number and the production forecast. And both of those are a difficult number to get. But now we've added a third. What's the costs, the deductions going to be? And what are the capital credits going to be? And without information about those, we're shooting in the dark in terms of really trying to anticipate next year's revenue sources. These companies provide this information to their partners. They provide it to the state. The state will keep it confidential, but will use it and be able to anticipate what our revenues are going to be, and we'll be able to use it to be able to match up against what they report and to be able to audit and have that confidence that what they're providing to us is what they told us was going to be expended in a more timely manner. Secondly, information sharing between the state agencies. Tom and I have both talked a lot about the teamwork that has developed between the Department of Natural Resources and the Department of Revenue. And this is something that is somewhat new to the state. I'm not sure when these agencies really started to drift apart in terms of their work and the sharing of information, but it is really a detriment to the state's interest to not have the sharing of information between these two agencies that both have critical information related to the oil and gas industry that is such a driver of not only the state income, but the state economy. And because the Department of Natural Resources is also very much involved in driving the management of the state lands, ensuring that development is taking place in a timely manner, the interaction between the two agencies can greatly enhance the state's ability to manage the state's interests. And yet there are artificial barriers that have existed between the two agencies in sharing this information. And we believe that those need to be clearly and through the legislature removed so that the agencies can share this information and still keep it confidential and have the same safety from the industry's perspective in terms of the proprietary nature of this information, but be able to share it between the state agencies to protect the state's interests. Finally, public disclosure of certain information. The rules with regard to what types of taxpayer information can be revealed are somewhat murky. It's unclear to what extent the department can easily reveal even statistical information, aggregated information that come in from the taxpayers. We want to have clear rules that are in the law, given that we're moving into a tax system that's going to have a lot more moving parts. In order to keep that public confidence going with a tax system that is otherwise fairly opaque, and I think the public has experienced this over the year that PPT has been in place, where we cannot easily tell folks what's going on out there in the field in terms of what's being deducted and what are the tax rates on a field-by-field basis. And we need to be able to provide that type of information to ensure that the public has that confidence and that we're able to provide the folks who are so interested in this, the citizens of the state, with a picture of how this tax is actually working. And so this is a balance between protecting the confidentiality of taxpayer information, but also providing information to the public so that they can understand the way the tax is working. The way we're proposing it within ACES is that the agency, the department, can reveal taxpayer information only to the extent that it is aggregated among at least 3 taxpayers and does not violate that confidentiality. And finally, clear rules. This is a very important part of being able to implement a net-based tax. We need to have the law clearly establish what can be deducted and what can't. And we also need to put the state in the position of defining what's going to be deductible, as opposed to having a very broad description of being able to deduct anything that's related to oil and gas production and having it rely upon other standards outside of the state public policy definition, and then only define what's out. That's the way the current system works. We need to have the state define what's in and establish what is going to be deductible. And then finally, we need to make it clear that certain costs are going to be excluded and are not part of the state's obligation to subsidize through the credit program. In particular, corrosion has become a shorthand version of the costs associated with improperly maintained equipment, deferred maintenance that ends up costing a lot more than it would have if it had been done properly during a regular maintenance program, and having the state end up flipping the bill because now we're switching to a net-based tax and we end up paying for a lot of deferred maintenance through this program. We've included rules within ACES that will make it clear that if there's an unexpected interruption of service and there's costs associated with bringing it back online, the state's not going to have to pay those costs. So that's included in ACES. And finally, when a field is through its life and the company is going through the process of cleaning the site up, removing the equipment, restoring the site, and bringing the state land back to its original state, the state should be subsidizing that as well. That's a cost that this should be borne by the companies themselves. So, now we get to the part where we get to have the discussion.